Yeah, good morning once again. And today
Good
we'll
morning.
talk about uh, simple cash book or single column cash book. Okay. Now I want Pawan G to read the paragraph, or Maria, you read it.
Yes, sir. Cash book, sir.
Yes.
A cash book is a special journal which is used for recording all cash receipts and all cash payments. Cash book is a book of original entry since transactions are recorded for the first time from the source documents. The cash book is larger in the sense that it is designed in the form of cash accounts and records cash receipts on the debit side and cash payments on the credit side. Thus, the cash book is both a journal and the ledger.
Cash book is both the journal and the ledger. All the cash receipts are recorded on the debit side and all cash payments are recorded on the credit side. It is an account of receipts and payments of cash. So it is book of original entry. Okay, it is one of the subdivided journals, one of the subsidiary books, and not only subsidiary book, it is also cash account. It is both a cash book and a cash account, right? And these cash books, we have various types: single column cash book, double column cash book, triple column cash book, petty cash book. Okay, petty cash book. Now, to begin with, we will look into single column cash book. Single column cash book. Okay. Now, why we are calling single column? Because, it has only one amount column. How these columns are numbered? The number of amount columns, based on the number of amount columns, we are calling it single column, double column, or two column, or three column cash books. Okay, so the book we are preparing now, or we are going to prepare now, is single column, which means there's only one amount column instead of two or three amount columns. Okay, all cash receipts are recorded on the debit side as it is discussed, and the payments on the credit side. Okay, and the format is simple. Format is simple. On the left side, you will see, left side means debit side. Okay, date, particulars, receipt number, ledger, folio, column number. Okay, and amount. Date, particulars, receipt number, ledger, folio number, amount. Okay, and on the credit side, you will find an equal number of columns. Okay, the first being date, second particulars, third voucher number, and fourth ledger folio, and lastly amount column. There's only one amount column, therefore it is single column cash book. And don't say, sir, there are so many columns. No, we are not bothered about that. The amount column is only one on debit and credit side. Okay, one on debit side, one on credit side. So therefore, we are calling it as single column cash book or simple cash book. Simple cash book. And whenever you're receiving money from anybody, you have to give a receipt. So therefore, at the time of receipt of cash into the company, we give an acknowledgement of receipt of cash. That's receipt number. Okay, or receipt simply. And the number of that receipt you have to write here. Similarly, when you're paying cash, okay, you have to take the proof of that payment. Okay, what's the proof? The one who is taking money from you, the company, will put his signature. When he's putting his signature on a piece of paper, that's an evidence that you have paid to so and so person, because his signature signifies that he has received the money and you have paid the money. That's an acknowledgement. That's an evidential slip. That's called voucher. Okay, voucher. Right. So date, particulars, receipt number, ledger folio, amount. Date, particulars, voucher number, ledger folio, amount. These are the columns. So in light of this, let's take an illustration. Let's take a problem and then,
Sir,
yes, please.
sir, Bhavani got disconnected, sir. She asking to allow him.
You know, at the time of, let's try to avoid this, but this is inevitable. What to do? Yeah. So we'll take a problem. We'll take a problem, right? You know, these are the details I have explained. Date, you know, date on which the particular amount is received or paid, okay, and particulars, the details from whom you're receiving the money and to whom you're paying the money. Details are written in particulars. I told you the receipt number and voucher number, and ledger folio, you know it already, an amount you drop in the amount column. And what is balancing? What is balancing? I want somebody to read it. Balancing. Balancing. Yes. Jan, we read it, ma.
Yes, sir. Balancing. The cash book is balanced like any other account. The total of the receipt debit side column will always be greater than the total of the payment column credit side. The difference will be written on the credit side as by balance carried down in the beginning of the next period to show the cash balance in hand. The balance amount is recorded in the debit side as to balance brought down.
The debits, the account shows, the cash account or cash book shows debit balance. What does it mean? The debit side is more than the credit side. Okay. So please remember the total of, listen, ma, do you underline, do you see my underlining or highlighting?
Yes, sir.
Yeah, the total of receipts column is always greater than the total of the payment column. Please remember it forever. Yeah, you know, when you look at law of diminishing utility or marginal utility, okay, the additional satisfaction goes decreasing as you increase the consumption. But this has some exceptions. Okay, and for luxurious goods like diamonds and jewels, okay, the more you take, the more you want to get more and more. Okay, it will not be satiated. The desire to possess them will not be satiated. That's an exception. But as we consume, okay, the diminishing utility, the marginal additional utility or additional satisfaction goes down. That's an exception. There's an exception to that principle. But here, there are no exceptions to this statement. The total of receipts column will always be greater than the total of payments column. The total of receipts column will always be greater than that of payments column. Or the debit side is more than credit side always. Why? Anybody? I'm asking why. Anybody? Yes, the answer is with you. We discussed it. Yes? What's the answer? What is cash?
Asset.
Asset. Now, what did we discuss, you know, when we are talking about rules of thumb rules? Assets accounts always show debit.
Debit balance.
Debit balance.
Debit side is more than the credit side. Always. Always, not sometimes. Okay? Always. Assets accounts always show debit balance. Means assets account debit side is always more than the credit side. Okay? So the difference will be written on the credit side as by balance carried down. On credit side, there's a gap. That back gap, you will fill it by writing by balance carried down. and you put the last date in the date column, even if it is not given in the problem. Okay. So the last day in the date column, in the particulars column, by balance carried down, carried down. Okay. Now the same will be what is closing for this accounting period will become opening for the next accounting period. Okay. The next accounting period, on the first day of the next accounting period, again you'll write there to balance brought down, to balance brought down. Okay, right. Let's take this problem and it explains us even more better. Yeah. Now, as I'm reading the transactions, you will say debit or credit. Okay, whether this is to be debited to the cash account or credited to the cash account. Okay, enter the following transactions in single column or simple cash book of Mr. Kumaran. Mr. Kumaran. On January 1st, 2004, started business with cash. Now, what do you do with this transaction in cash account? Would you debit or credit?
Credit.
Debit, sir.
Debit.
Debit.
Janvi says debit and somebody else says credit. Who is that?
Me, sir.
Okay, who is that?
Kishore.
Kishore says credit. You know, when capital is introduced, okay, when you start a business with cash, cash comes in. Na? What is cash? Asset. Na? Debit what comes in, right? So cash account is to be debited. Okay, cash account debit to capital account. That's a transaction we have written. Na? In journalizing and ledger posting also we have written that. So cash account is debited. Debited. Next, purchases of goods for cash. 500. Goods purchase simply. Debit or credit?
Cash
Credit.
account is credited.
Cash account is credit.
Credit.
Cash is going out. Credit what goes out? Sold goods.
Debit.
Cash is debited.
Cash is coming in. Debit what comes in? Cash received from Siva.
Cash is debited.
Debit. Debit.
Debited.
Right, very good. Next, paid balance.
Credit.
Credited.
Bought furniture.
Credit, sir.
Sir.
Going out. Credit. Purchase goods from Kala on credit.
Will not include this in the cash book.
Will not include. Why?
It's a credit. It's a
Because
credit.
It's on credit, not on cash.
Cash involved. Very good. Next, paid electric charges.
Credited.
Credit, sir.
Credit. Paid salaries.
Credit.
Received commission
Debit.
Debited.
coming in. Very good. So, that's what exactly we did here. Look at this. When you introduced capital, it came in debited to cash book. Okay. You can write in the books of Kumaran or cash book of Kumaran. Anything you can write. Right? Cash book. Debit. And look at this one. Cash book debit to capital account. Okay, 1000. Cash book debit to sales. When you sell, you got 1700. Cash book debit to Shiva. You receive 200 from Shiva. Cash book debit to commission. You received commission. When you received commission, cash came in debit. What comes in? When you received cash from Shiva, it came in debit. What comes in? When you sell goods, cash came in debit. What comes in? When you introduce capital, cash comes in debit. What comes in is applied to cash book. Similarly, whenever the cash is going out, okay, you credit that with that particular detail. When you're purchasing, cash goes out. Okay, so purchases to cash. So therefore, in cash book, buy purchases. In purchase account, it is debited, but in cash book, it is credited. Okay, in cash book, you will write purchases. In purchases book, you will write cash. Okay, when you're writing cash, you will write on the debit. And in cash book, you're writing on the credit with the purchases account. And similarly, you pay to balance. Okay, it's credited. You pay to buy the furniture, you're credited. You paid for electric charges, credited. You paid salaries, credited. whatever you're paying, whatever may be the reason, you have to credit it. Okay, the total is 11,000. I'm sorry, 6,000, 6,000, 6,000. 25 or something on the credit side. 500 plus 650 plus 750, 850, 850, 875, 875, 1075. Okay, 1225, I think. Yeah, if I'm not wrong, 1225. And on the debit side, you will see 2,975. 1,000, 1,700, 2,700, 2,900, 2,975. Okay, and this side totally is less. This side totally is very small. The highest total you're dropping here, and the difference being 1650 is the balancing figure difference. Also is the closing balance of the cash account on 31st day of so and so month. What is closing now will become opening for the next accounting period on February 1st. So 1650 is the opening balance for the next accounting period, right? The transactions dated on 15th will not be recorded in cash book because it's a credit transaction. That's what one of our friends said. So please ask me any doubts here before we go to the next.
No, sir.
No doubt. Now let's come to the two-column cash book. Having seen the single or simple column, simple cash book or single column cash book, now let's look at two-column cash book. Okay, this is also called as double column cash book. Why it is called double column cash book? You know, to the amounts column, you have one more column joined or added. Okay, that's discount column. Okay, look at this. The most common double column cash books are cash book with discount and cash column, cash book with the bank and cash column. Okay, but we will see cash book with the cash and discount, right? Cash book with the discount. Now this is the specimen, the model, the format of the double column cash book with discount and amount columns. You know, all the others will be same: date, particulars, receipt number, ledger folio is same. Okay, amount also is same. Only thing is discount column is added on both the sides. That's it. Only discount column is added, right? Date, particulars, receipt number, LF, amount are same. Okay, date, particulars, voucher number, LF and amount are same on the credit side. Okay, only thing is on both the sides, there's one column added. That's discount column. Discount column. I want somebody to read this paragraph. Can you please? Yeah, Janvi, go ahead, ma.
Yes, sir. It should be noted that in the double column cash book, cash column is balanced like any other ledger account, but the discount column on each side is merely totaled. The total of the discount column on the debit side shows the total discount allowed to the customers and is debited to discount allowed account. The total of the discount column on the credit side shows total discount received and is credited to discount received account.
That's it. You don't need to do anything. What is that? There's something called balancing in accounting. Okay, for any account you're balancing, right? Previous account also you have balanced. Okay, now in this double column cash book, please note that the discount column on each side is merely totaled. That's it. You don't need to balance what is the net amount of discount received or paid, allowed. You don't need to do that. You don't need to take the net of the discount received and allowed. Okay, right? So only thing is you have to simply take the total of the discount column. That's it, and leave it. No need of balancing it on both credit and debit. Are you getting me? You don't need to balance the discount column. let's look at the problem. Let's look at the problem. Prepare a double column cash book from the following transactions of Mr. Gopalan. Okay, as I'm telling you, please tell me, as I'm reading this for you, please tell me whether it is to be debited to the cash book or credited to the cash book. January 1st, cash in hand,
Debit.
debit, has to balance brought down. Okay, cash put,
Credit.
cash put,
Credit.
credit,
Credit.
going out, wages paid,
Credit.
credit, cash sales,
Debit.
debit, cash received from Suresh and allowed him discount,
Debit. Debit.
cash paid to Meena and
Credit.
credit,
Credit, sir.
cash paid to Radha,
Credit.
credit, purchase of goods for cash.
Credit.
Credit, sir.
Deb-
Okay,
Credit.
now simply,
Credit.
easy.
Credit.
Credit.
Simply bring these details and place in this
Credit.
double column cash book. Okay, place in this double column cash book.
Sir, it is going.
Yeah, look at this.
Credit.
Yeah, opening balance is this. Opening balance is this. I think it's a bit inconvenient because because
It's slanting, sir.
format, because of this format, I had to place it in this landscape mode. Okay, otherwise, okay, it's getting disturbed. The table. So please bear with me. Is it okay? Are you able to see?
No,
Yes, sir.
next page.
Yes,
We have to
That's only thing.
reverse our phone.
Laptop or no, or you don't need to turn your laptop. You have to turn your head. Or if it is mobile phone, you can turn your mobile phone. That's no problem. But don't try to tilt the laptop. The circuits get disturbed. Okay, between the keyboard and the display. Don't move the laptop. Okay, just bear with this only. Okay, to balance brought down. That's opening balance. Okay, opening balance. Yeah, this is opening balance. Engundada. Right. Now this is 4,000 opening balance. To balance brought down opening balance. Okay. Next, sales. Sales, cash sales 6,000. Cash sales, two sales. Cash comes in, debit what comes in. And likewise, Suresh paid, debit what comes in. When he pays, we get into it comes into the company, we get it, right? We receive it. Okay, so it is debited. And similarly, yeah, all the payments, wages paid, purchases, okay, and cash paid, and cash paid to Radha, purchases, all these things come on credit because they're all payments. It's going out. Credit when the cash is going out. When you buy, it goes out. Wages, when you pay, it goes out. Cash goes out, credit. When you're paying to Meena, okay, 2,470, it is going out, credit. Of course, you can uh, write the discount amount in the discount column. Okay, 30 rupees is the discount given. So you're writing in discount column. When you pay Radha, cash goes out, credit, what goes out when it's going out. And when you're purchasing again, the cash goes out. Every time you see the cash going out or moving out of the company, simply credit. Okay, so except this 5,000, all are payments. What is this 5,000? This is the difference. The total of credit is 6,980, whereas the total of debit is 11,980. Okay, so the highest total is dropped on both the sides, including Even on the credit side, 11,980 minus 6,980 gives you a difference of 5,000. What is that? Balance carried down. What is that? Balancing figure. Okay, what is that? Closing balance as on the last day of the accounting period. And the same is brought to the next accounting period's first day of the next accounting period. Okay, we write 5,000 in the amount column and we write in particulars to balance brought down, ended the solution. This is the end of the solution. Okay, this is how you had to prepare double column cash book with Mr. Gopalan. Cash book with discount and cash column. Right? Yeah, doubts please.